Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Monday, June 13th, 6:29 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Okay, guys, ton to do this morning. Obviously, if you've looked at futures, more downside pressure following up on Thursday and Friday's moves. This would be a great day to have a pencil and paper handy. Not going to have a ton of time for big discussions. I want to go through a lot of charts and give you key levels, stuff like that. Taking a look at futures, Bitcoin down an astounding 17%. The number there to watch is 24,000. ES down 2.3%. Pre-market support is 3,800. NQ down 3%, maybe a little more. Your number there is 11,450. And RTY small caps down 2.5% to 1750, 1,750. And even if you don't trade futures, I think those are good numbers to have highlighted or to watch on your little side panel of where we're at. I think they probably those are very well defined levels versus looking at SPY and trying to dial that in. The big things on the macro this week, we have a big VIX option expiration on Wednesday morning. Then we have the Fed at 2 o'clock Wednesday afternoon, followed by the presser at 2:30. And then we've got a massive, like I think they're calling it the biggest in history, option expiration on Friday, June 17th. So let's dive into the charts. And I want to preface this discussion about how to think about today and what has transpired over the last couple days. What's done is done. We can't get back the money that we lost on whenever. It doesn't matter if it was Thursday or Friday or this morning pre-market. If you let yourself wallow in that mentality, it's going to be hard to open up to the next opportunity, whether that's downside or a bounce or whatever. So try to get yourself in the frame of mind that what's done is done. Let's look for the next opportunity. So starting on TLT weekly, your main pivot on TLT is 110 on the weekly. You lose 110, your next target is 105. Above 110, resistance is 117.50. And what we may see here, they may all go down together. I haven't looked at the pre-market, but there may be a rush to quality. But given it seems like all the correlations are going to one, they might go after TLT as well. I think 110 is a real good line to watch on TLT. Weekly chart. Bitcoin came down out of the last sharp drop. Then we had a long consolidation between 28,000 and let's call it 33,000. What I've done is taken the measured move, and that projects right down to 24,000. That's where we're at right now. If you are trading Bitcoin or any of the proxies, I think 24,000 is a great pivot. And then the next level below that is down around 19,000. If I go out to the weekly chart, you can see we had a big upper range consolidation. And if you take this box from say 35,000 up to 60, or wherever that number was, I transposed that box down here and that brings us down right into that 19,000 area. So those downside targets line up on the daily and the weekly. And don't forget, we talked about it several weeks ago, that Michael Saylor and MicroStrategy, they've got a margin call somewhere in the 21,000 range. So you may have a whoosh bar to the downside if they've got to liquidate a bunch of Bitcoin on that margin call. So that may be a macro event in Bitcoin to watch. Moving on to the oscillators, big plunge down to minus 40. Here's what you got to do. You put a big red box around this spike above 60, and you put "Don't fight NIMO." It wasn't different this time, and that's completely on me. This thing just does not lie. It just, no matter how it feels, nothing. You get up here and you come down, go back in history, check it out. I thought we could hover and grind higher, but obviously that was wrong. Now we got to look, today, great chance to become, oversold in just 3 days and come down in this God, who knows, minus 65, minus 70, minus 90, depending on what happens today. So then, just like that, we'll go from overbought to oversold in that shorter period of time. So, depending on how it goes today, be very careful about shorting into the hole. What do I mean by that? Being a Johnny-come-lately, you weren't scared, or we weren't positioned properly on Wednesday. If you have shorts now and you get a big whoosh, you can roll down and stay short. But I'd be hesitant about piling into shorts at, on a big down move today. You might get your face ripped off going the other way because of this VIX option expiration. We got the Fed in front of us. So if you've closed out a lot of stuff, you got to be really, really nimble right here. Same thing on NAMO, overbought down here in the 15 range. This one is not as pronounced as NAMO. We could come down into the minus 60 area today, maybe a little bit more, but it's not going to, I don't think it will get to these extreme levels on the NASDAQ, at least today. SPY, weekly chart. In hindsight, this looks like an A, B, C move. We had really a three-week rally that stalled, and now last week, big red bar. I think you got to watch on the weekly chart. You've got some support coming in at 375. If you lose, if we lose 375, then the next real area of support is down at 345. So that would be a down a T1, if you will, if we lose 375. On the daily chart, I've got the gap identified for you here. You can see right here we had a spike low down at 380, and that's where we're trading pre-market. So this prior low is going to become really, really important today. And it also gives you a really nice pivot there at 380. And the question always becomes, do we rally up to fill the gap today? Or do they just take it lower? And I already told you that there's some support at 375. So we could easily, let's just say we open around 380, come down to 375 and get a bounce there, or whatever might happen at 375. But I think 380 is going to be a really, really key level today to watch on SPY. Moving on to the Qs. You can see that we are at the 50% retracement level off of the COVID lows. Right down here in this 280 area. If we lose 280, then I think the next level you can be looking for is 260, and then potentially 230. And I think a good reference point on whatever chart you're trading, a good reference point is going to be the pre-COVID high. And if you go back and look, that's where I've located this target back at the pre-COVID highs, and that was around 230. So a complete round trip from the breakout all the way back to the beginning on a complete round trip. So I would be focused on 280, 260, and 230 on QQQ. If we go down to the daily chart, you can see, one, I've got the gap from Friday, but also I've tentatively penciled in the opening gap from this morning. If the pre-market holds where it is, regardless, you've got a prior low right here at 280 from back in May. And just remember your technical tenets. When and if you violate a prior low, that opens the door to new selling. So it's going to be important short term to hold the prior low at 280. And I would be hyper focused on that. And the thing about it is very, very well defined. Above 280, you can certainly try to play for a gap fill bounce with a stop just below, or you can just wait to see if 280 breaks, and then you've got an objective short against 280 with a stop just above. I would imagine there's going to be a lot of volatility today. I have not looked at the VIX. I will do that. But it's starting from a fairly low level. So it's got as far to the upside as you can imagine on the VIX if it wants to. So let's kind of leave it at that. IWM weekly. We closed on Friday at 178.59. We've got multiple lows down at 170. And then the pre-COVID low, or excuse me, the pre-COVID high was back here at 165. So, for all intents and purposes, IWM is almost there. I mean, given that we're down this morning, you break 170 to the downside, you are going to have a ton of support here at 165. And then if 165 breaks the pre-COVID highs, then you're going to be re-entering a big range, which could push it down towards 145, 140, where you've got the largest volume over price bar on the chart. So that's going to be a massive level when and if we break 165 to the downside. You could easily get another $15 out of that on the downside. Here we are on the daily chart, and you can see this prior low right here at 170 is going to be important. And I do have a gap marked here between 167.62 and 161.67. So we could come down to that level and bounce, or if we enter that gap, it's going to be a big one, potentially all the way down to 161.67. Facebook, Meta, we ended on Friday right at 175. We've got a prior low right here just below 170. I think 170 is going to be a nice pivot, and you've got a prior low back here, the COVID low down here at 150. So, and even you could go lower down to 140 if you wanted to, the spike low down here on the spike COVID low went all the way down into the 130s. Just call it 140 for now. But a lot of potential downside. And you can see on Thursday and Friday, we went ahead and filled that gap down to 175, and here you have this most recent low that comes in, let's call it 169. So bigger picture, anything below 175, I think you can be short. Of course, remember, there's most likely going to be a gap open down, so just have that prior low at 169 marked on your chart. Apple Weekly, we've got a recent low at 132.61. I think that's an important level, 132.61. We've got the 38% retracement level at 132. And then notice we've got a value area between 132 and 115, let's call it. And that would be the 50% retracement. Lines up pretty well with 115. So I would say on a break of 132 on the weekly chart, that opens up the door to a move to 115. And we can, hold on a second. Yeah, here's the daily chart. Here's where we ended up on Friday. Here's our most recent low at 132.61. I would be focused on that level this morning as your pivot point. Above, there will be an open gap. Below opens up the door down to 132, and below 132 opens the door towards 115. Tesla, not a lot of reasons to look at the weekly chart. I'm going to keep it focused on the daily chart because of the relative positions and everything. 700 is a key level. We're trading right now in the pre-market about 675. As long as we're below 700, the door will be open to 625. And that's the prior low. We had multiple candles at that level. I think that's going to be a big one to hold if we in fact go down today. I don't think you can really get on the bullish side until we move down to 625 and it holds for a double bottom, or we recapture 700 this morning on some type of a rally. And if let's just run through a scenario. We open at 675. There's a rally. And it rallies up to 700 and stalls. Fills the gap for that check mark. I think that's a very objective short entry right there. Why? Because support. That's a big line of all those levels of support become resistance once you get below. And I would be willing to take a shot on the downside if you got a rally back up to 700 that stalled. And then what you're looking for, obviously, is a move back down to 625. But I think that's only going to work if there's an early rally to fill that gap. And so that remains to be seen. If you're down here in the 670, 675 area, unless you're a real sharpshooter and you can trade that opening range, you're really in no man's land down here. So that might be a tough trade to take. You just have to lean on, your particular skill level as whether you want to, try to get involved inside of that bigger trading range between 700 and 625. Moving on to Microsoft. On the weekly chart, it stopped right at the prior at the lows, the prior lows back here in the week at 252. You notice that there is a low at 246.44. I would have that level highlighted on your charts, 246.44. And anything below 250, I think, leaves the door open to, number one, you've got a 50% retracement zone at 238, and you've got technical support at 230. I think below 250, the door is going to be open to 230, and that's what I would be targeting. And excuse me, remember, I don't have it measured out, but you've got, and you'll see this on a lot of charts, your A, B, C type move. Let's see, going from 315 to 345 is, what is that? 55. Let's see, there's 15 and 55 is, no, wait a second. Yeah, sorry about that. That's a $70 move. And so 70 from 277 puts you down at 200 roughly on a measured move basis out of this flag. So you may want to put that somewhere on your chart. Here on the daily, this looks like a bear flag breakdown. We've got prior lows along this line of 252, and then you got your spike low down to 246.44 right here. And so that would be the number that I would be focused on today, the prior low, 246.44. And then you'll have a gap back up to Friday's close at, let's call it 253 right here. So you'll have a gap back up to 253. If you got that gap fill, say there's a big rally out of the, in the first part of the morning, I would treat it exactly the same way as Tesla. You get a rally to fill that gap and it stalls, then you got a nice short against 253. Amazon, really, really weak. And don't forget, the guy that ran 75% of Amazon, I think his name's Dave Clark, just left or announced his departure. So, big impulsive move down, kickback rally, bear flag. I've dropped in the ABC measured move, and you can see that it's way down there, pushing towards $75. I think the level to really watch today is 102.50, and that a break of 102.50 gets you back into this prior trading range, and that could take you all the way down towards 87.50 and potentially the COVID lows down at 80. Let's look at the daily chart real quick. Here is the bottom of that box, 102.50, which ran up to 115. So a break of this box, which is $12.50, takes you down to 90, right? So if you take this box, calculate the measured move on a break of 102.50 on a measured move basis, that takes you down to 90. Google weekly, 2200 is your pivot, and then you had a prior low at 2050. If 2050 were to break, going to 1750, back here where you've got a large volume over price bar down here, and that lines up with the 618 retracement. So you've got a little window there between 1750 and 1800, but a break of 2200 would definitely be bearish. And then you've got the prior low at 2000. So potentially $400 of downside from Friday's close. Netflix, very rough, very weak. This is a monthly chart, and I could see this thing go, and we talked about this before, a stop at 125 and potentially all the way down into this 65 area, which is the long-term trend line off of the 2005 lows. Let's look at the daily chart, and you can see that we've got a line right here at 165. That was the prior low, and I think you breach that point and then you start heading down. See if I can find a weekly chart. Yeah, you got 175, and then you got like 160, actually 170 down here as the spike low. So I would be focused on 175 and then 170, and then below that, way down. Semis weekly. This 223 looks really important. You break that and these prior lows down at 215. That opens the door towards 205 and then 180 on the downside. Look at the daily chart. You can see that we're, and this is very instructive. All we did on that rally is check the top side of the channel where it rolled over. And so now we're at 223, which was an important level in the past, right here. And then you've got a most recent low down at 215. So I would be focused on that 215 this morning. We'll probably, gap down however many dollars. And then on the, see if I can find it. Yeah, on the weekly chart below 215 opens up 205, 206. Now on the ARC complex, we can use the 60-minute charts because we've got most recent lows right here that we can work off of. So for ARC F, here are the levels: 116.50, 15.75, 15.25, and 14.75. Those would be your downside targets. 16.50, 15.75, 15.25, and then 14.75 on ARC F. ARC G, the weekly chart there. I missed this one on the way through. I think the number you key off of this morning is 28, and then 27.50 was the prior low. So below 28 opens up 27.50, and then below that we go down lower. ARC K. You had a prior low at 39. You've got a shelf at 36.75. And then you've got a spike low down at 35. So those would be my downside targets on ARC K. 39, 36.75, and 35 on the downside. And let's wrap up with ARC W. Got a prior low at 50. You've got a shelf at 47. And then you've got a spike low down at 45. So 50, 47, and then 45 would be downside targets. And remember, all the same comments apply. All of these will open with a gap above. If there are rallies that fill the gap and then stall, you could be short against any of these names for a short-term trade against the top of the gap if that's where it fails. So in this case, it would be, 52.25. You could, take your short, put your stop above, just above at say 53. So you got 50 cents worth of risk, and then just a lot of downside opportunity. Those would be very, very attractive risk reward shorts. Now, I don't see any reason to go, you'll have to decide how you want to handle the Fed. If you're going to say, you know what, that's a total coin flip, they could go 75 or 100 basis points instead of their, published 50 basis points. That would probably result in a big leg down, but who knows? So my point is, if you don't want to be involved in a big way through the FOMC announcement on Wednesday afternoon and then the OPEX on Friday, there's no sense buying, something in July if you're going to just turn around and get out of it for the FOMC. If you're going to actively trade, just get something for Friday. You don't have to buy a lot of time premium if you've already decided that you want to be mostly flat for the FOMC. Now, if that doesn't bother you and you think there's a much more higher likelihood that we go lower out of the FOMC than higher, then yeah, you can go out and take a longer term view that lower is probably more likely than some kind of big rally. So we'll just have to see how today plays out. Watch your risk. Don't try to clear your mind if you were caught off sides on Thursday and Friday. Don't try to make all that money back by 4 o'clock this afternoon. Just start chipping away with good trades, good objective trades that are well managed. Reduce your position size because there's going to be a lot of volatility that you'll have to sit through. So that's the way I'm going to try to approach it. I realize easier said than done. Really tricky environment out there. So line up this morning what you want to focus on and then focus on that instead of 20 stocks or whatever the Twitter world is saying to do. And I think this would be a great day to make sure you got the TV off, because they're going to be hair on fire, recession, every negative thing in the book, they're going to be harping on that. And I think this is a day to really focus in on the charts and how the price action is behaving. Now, what I want to do coming out of this video is I want to dive in on the SPDR sectors on the weekly charts. Those are going to be really, really important because now we're pressing, after the rally, we're pressing the downside supports on a lot of those weekly sector charts. So I want to give you those levels. So after I close this one out and get it out to you, I'm going to try and get you the spider sector ETFs right on the heels of this one. So let's wrap it up there. If you're new to the channel, thank you so much. I hope the levels help you today. If you think you could benefit from some technical analysis with the levels right in front of you, please subscribe, hit the alarm bell, jump over in the show notes, find the link to add your name to our list. Takes 5 seconds. Then morning, noon, or night, you'll get whatever I send out right to your email box. We'd love to have you. Let's wrap it up there. Chris Best with Traders Profit Compass. Have a good day of trading, and talk to you next time.